Hey traders, Raghee here, and in this free recap video, I'm going to cover a concept about market structure and choosing the time frame that has the right market structure. And we're going to use probably some of the wildest markets out there right now, and those are the equity index futures options. And you know, the thing about these right now is that we're dealing with obviously the big sell-off on the daily, and we're trying to figure out at what point do we start to see either a downtrend organize, chop actually confirm itself. We actually probably have a minor low in place on the NASDAQ, on the ES, and on the Dow. And that's just a 3-candle pattern that basically has a lower low, and it's surrounded by 2 higher lows. So what you have is this being the minor low, and you can see that's really what we have right here. Not a perfect example, but I would consider that a minor low, which could be just a near-term low at the moment. So the next question is, all right, if we can start to look at some intraday trades, what are we looking for? Now, first of all, what time frames are we looking across? I would prefer to stick with the 1 minute, the 3 minute, the 5 minute, or the 15. So that's where I'm scanning, and those time frames are short enough for my trades to remain what I call nimble. I just want them to stay nice and short term. Nimble meaning if I want to get in, I can get in. If I want to get out, I can get out. I mean, I want to be able to get in and out with relative ease. That's what I'm looking for there. So the next thought is, well, what is structure? And structure is the culmination of a consistent color of grab candle, and so that means I'm looking for consistent green or red or blue, and I'm not really going to favor an uptrend or a downtrend. I just want something consistent. Now you might say, well, why would I look at blue? Blue is neutral, by the way. Blue is going to be a really good candle for a pause. It could be consolidation. It could be a low vol environment, even if just for 15 minutes or 5 minutes or 20 minutes, right? So it's going to give you a clue to just some sort of near-term stall. In other words, here's a stall, here's a stall, here's a stall. Going up into the wave, there's a stall. Going up into the wave, there's your stall. You know, there's a nice stall type heads up with a blue grab candle. The other thing that I want to focus on is when we do stall or when we do bounce, are the lines of the 34 EMA wave able to contain it? And the 34 EMA wave is the high, the close, and the low. All right, so let's look at another example. Let's grab a very popular contract in the S&P. Now, I do want to give everyone a heads up on the S&P, and some people might find this very different advice than what they're used to hearing, and let me explain why. I believe that if you're going to trade the S&P, and we're looking for the same kind of market structure, by the way, look for those pause candles, look for the candles to have resistance within the wave. One of the things I would highly recommend specifically about the S&P is think about the weighting. Think about that you've got the Dow on one side, you've got the NQ on the other, and then you've got the ES in the middle. Now the ES is a funny little contract. A lot of people want to trade this one first for any number of reasons, but humor me and think of this one last. And the reason being is you want to think about the way the S&P moves with the NASDAQ. You want to think about the way S&P moves with the Dow. Unless one of these has chosen to be sort of the directional leader, the S&P will not really trade with clarity because it trades in sympathy with the NAS when tech is leading, and it trades with the Dow when basically tech is not leading. Maybe financials are moving. So think about the fact that the S&P is always going to be in this kind of tug of war between these two contracts. And until you figure out, one, which one's moving, and then two, which one the S&P is moving with, that's the big question mark. Which one is it moving with? Once you see movement on either one of these, trade the S&P last. Okay, so having said all that, look for structure in any market, and you want to look for structure across the different time frames. So scan the 1 minute looking for structure. And you might only know, so you might only know after the fact. You might think, well, Rog, how do I know the structure? Use some minimum requirements. How many green grab candles are we seeing? Rule of thumb, wait for about 5. How many propulsion dots are we seeing? Rule of thumb, wait for about 5. Okay, this is kind of conservative, right? And then once you've got about 5 candles, maybe 5 propulsion dots, you're going to basically say, okay, the next time the market pulls back, I'll buy it. The next time the market pulls back, I'll buy it. So kind of use the 5 by 5 rule. That's very conservative. Some traders who, once you get the feel for the dots and the green grab, you'll come up with your own numbers, but wait for the pullback. Wait for the pullback. And this is a 1-minute chart, but wait for that 5 by 5 rule, and you should be in pretty good shape looking at conservative trends on any time frame. I'll see you in the next update.